Well, hello there. It's Friday, October 4th, and thank God it's Friday. So, in about, by the time you read this, we're going to get the employment numbers. The consensus is 145,000. The consensus range is between 120 and 180, 179,000. That's a pretty wide range. I don't think the numbers are going to be outside of this range, and I think the numbers are going to be in line with estimates. What I'm looking at is the unemployment levels. If you look at the consensus, it's at 3.7%, and the range is fairly tight, 3.6 to 3.8. If the unemployment rate is much, much higher, that's going to be a big problem. That's going to be a red flag because we had worse than expected industrial numbers. And industrial numbers are telling us or reflect on employment because a huge amount of the workforce is in industrial production. So that's the main number we're looking at. Now, if the unemployment rate is too high, that may cause the stock market to come down a bit more and drag around here. Now, this is the S&P 500. I'm not happy about the fact that we didn't test or take out the high yesterday. Because remember what I say, if we break the 50-day moving average and we stay or we stick around here for a day or two and we don't bounce back right away, then the odds are high that what we're going to see is similar to what we saw here in August, a very trading range type of environment without a lot of directional bias, okay? Typically, when markets hit below 50-day or the 200-day, they typically bounce back real quick or they stagnate for a while. So if we don't see anything really strong today, and I'm not expecting it, but you never know. If we see the high being broken, I would put an alert right at the 190, I would put an alert right at the 190, 150 level. And if we break that level, there's a good chance we're going to hit the 50-day moving average. But again, if we don't see this market scream higher over the next few days, the odds are very strong that we're just going to hang around here. And that makes sense based on the fundamentals because nothing is being resolved with China. It's hurry up and wait. There's no resolution on the current trade war. And now we're having a new trade war with Europe over wine and cheese. That's right, wine and cheese. There's a law coming into effect that limits the export of wine and cheese from Europe to US. It's going to limit because there's a lot of wine and cheese being made in Europe. I know you can't make this up if you tried. But Europeans are upset at America because we're not going to be exporting into US wine and cheese, which means a lot less employees making wine and cheese in Europe, and that's putting stress on Europe, and that's causing another trade war. And I hope to God we resolve the one with China before the one with Europe really starts, because we don't need another trade war. One is enough. So again, keep your eye on the S&P. Don't expect a lot of upside. Expect trading range. Let me show you. This is the put to call ratio. And it went to 137 yesterday. That means the markets were scared yesterday. And that means there's a good chance we've bottomed out. But what this doesn't tell us, it doesn't tell us whether we're going to stick around here or if we're going to jump back up. All it does is tell us whether the market is overbought or oversold. And it's telling us clearly the market is grossly oversold. So the odds are we're not going to see a lot of downside. But whether we're going to see upside or congestion, well, that's a whole different story. Looking at the bond market, it's now rising off the 50-day line, as you could see here, about 3 days now. If it continues going higher, the odds are the S&P is going to stagnate and not really do anything. Also, keep in mind, and again, this is a big deal. Small cap stocks, or mid-cap stock, excuse me. Let me show you mid-cap stocks, not small-cap stocks. This is the mid-cap stocks. This is a lot more, this gives you a much better representation of the broad market because it takes those large S&P stocks, those 15, 20 stocks that account or control the S&P. Because remember something, folks, pay attention to what I'm about to say. The S&P 500 is based on the size of the stock. The bigger the stock, the more control it has in the S&P 500. S&P is not equal weighted. It's share based. So You can have a stock like Amazon, Apple, Bank of America, Johnson and Johnson. Those handful of stocks control all the other minor, smaller S&P stocks. And I know S&P stocks are supposed to be the top 500 stocks, but some are a lot bigger than others. So when you're looking at the mid caps, you're getting a much better representation of the overall stock market, not just the S&P 500. And as you could see here, we're literally touching the 200-day moving average. So if you strip those huge large caps, those big dividend stocks, those big tech stocks that carry premium, the market's actually substantially weaker than the S&P is showing us. Look, this is the S&P here. Notice that it's trading above the 200-day moving average. You see here, it's not touching the 200-day moving average. But if you look at the mid caps, they're actually touching the 200-day moving average. So do I believe the market's going to go lower? No. The put to call ratio is really overdone at 137. That's telling us the rubber band is stretched out. So I'm not expecting a lot more downside. But whether the market really jumps from here or stays stagnant like it did in August, that depends on the jobless claims. That depends on how good earnings are next week. Bank stocks start reporting, and that depends on Trump and China. We got to resolve this trade war, folks. Otherwise, smaller stocks that don't have as much market cap, that are one-trick ponies, are going to keeping us lower, keeping the broad market lower, as you can see here by the mid cap. All right, folks, you have a wonderful weekend. If you're enjoying these videos, let me know. I need feedback from you. I feel like I'm here by myself making these videos. I need feedback. Support at marketgeeks.com. Like this channel. Post your comments below. I'll respond. Reach out to me. Say hello. Support at marketgeeks.com. Hope you love these videos. Talk to you next week. Have a wonderful weekend.